to another stock which clearly disappointed, especially because it had a lot going for it. Havells is a stock on my radar. We have the management with us, Mr. Anil Rai Gupta, the Chairman and Managing Director. Mr. Gupta, thank you very much for joining us. Both sequentially and on a year-on-year basis, we have seen softness in the revenues and in the profitability. You don't see any improvement on the ground?
No, I think the sequential basis is not a comparison. The way we need to look at it is that, the sluggishness in the overall macroeconomic scenario, both on the industrial and the residential side started sometime in October. And the revenues are the same as that of October to December quarter. Last year, if you remember, the first and second quarter were really very strong quarters. And on that, because of the base effect, the first quarter shows muted growth or flat growth. So, the major degrowth has happened in the industrial demand and the residential demand remaining flat, as well as some consumer demand has grown. So overall net we have not seen any growth in this quarter. But this was something which was on the expected lines, because we have always maintained that on the macroeconomic side, things do not seem to be looking up at this stage, both on the industrial side as well as the residential side.
Okay, despite the softness in the commodity prices, after 3 quarters, your margins have actually gone back to the sub 13% levels. What led to this weakness in operational performance?
I think on the margin side, we have maintained margins as similar. In fact, the contribution margins in all businesses have shown a positive improvement, except in the case of lighting. Otherwise, there is a positive change towards that. A lot of structural changes have been made in our sales and marketing to go from the push-based system to the pull-based system, and that is why we are seeing the benefit of that. Raw material prices have also seen some impact, and it has come down, so which is all a positive on the margin side. I think the more and more the demand side of the things improve, things will be definitely better. On the PBT basis, we've kept investing on the brand and promotion side, where again we have invested 3.7% of our overall revenues. So we are quite satisfied on the margin front. I think the concern will be, when the growth things start coming up in the infrastructure, in the residential and the industrial side.
Okay. Mr. Gupta, after quite a while, we have seen weakness creep into your lighting and fixtures segment. Both revenues and margins are impacted. This is traditionally your strong performing segment. What went wrong?
I think again, we can't compare on the sequential basis because of the fourth quarter government uptake in demand every year. That was on a seasonal basis. On the margins front, these were one-off situations in this quarter, because there were certain changes in the way the excise duty was to be calculated on products. There were major changes that we made. A lot of shift happened towards the LED. And I think this was this particular quarter where we had all these one-offs. I think in the second quarter and third quarter, we'll see the margins start coming back, because the cost increases due to the excise change has already been starting to pass on to the market. And this quarter, we'll start seeing half of that slip coming back, and by the next quarter, it will come back fully.
So in the light of all this, what is your outlook for the second half of FY16, since we are already partially into the second quarter of the fiscal?
We would love to be optimistic here. We don't see much changes here even till now. The only thing that we can say is that the worst seems to be we are hitting sort of a trough here right now. And anything from here should be beneficial towards the growth. Second quarter also last year was a major push, and things started slowing down from third quarter. We are seeing a similar situation since the third quarter, fourth quarter, the first quarter of this year, the way we are getting into the second quarter. Hopefully things should start improving from the third and the fourth quarter. So we are all hopeful towards that.
Okay. Well, on a relative basis, which segments should see the fastest growth? Will it be consumer side of the business, or the green shoots on your industrial side?
Generally speaking, it has been seen that the industrial side starts growing first, and then the residential side. You never know how the market behaves this time, But as I said, anything from here should be a positive in each segment. So all our businesses, whether it is switchgear, cables and wires, they cater to both the residential and the industrial side, and any uptake would be a positive from there.
All right, thanks for joining us. Well, that's the big loser in the mid-cap space, but we have to address the global market. So when we come back from the break, we'll find out what's going so wrong with global equities currently. Stay with us.